So today's Ask the Expert topic is tokenizing equity. And for that, we've got Brickken. We have Edwin, who is CEO and co-founder of Brickken. So Edwin, do you just want to introduce yourself to the audience?
Yes, of course. Thank you very much for having me. So my name is Edwin Mata. I'm an M&A lawyer who pivoted into technology. And in 2016, I stumbled into a tech called blockchain. And basically 7 years later and a lot of gray hair, I'm still building here. Something that has to do with tokenization. So that's kind of like the digitization of an asset and embedded it into the blockchain. So thank you very much for having me, CertiK.
Happy to have you here. And as you mentioned, a lot of gray hair. You're building something that doesn't really exist right now. You're sort of on the frontier of building out this new technology. So maybe could you just speak a little bit about what tokenization is and then the exact goals that you have at Brickken for tokenizing equity in particular?
Yes, of course. So, I mean, basically, tokenization is the representation of anything, right? So we actually been using tokens for pretty much of our lives. Like when you go to a casino chip, it's a token. It represents money so you can play inside. And that concept got digitized. So banks, credit cards. A credit card is a representation of how much money you can spend based on the account that you have in the bank. So if we do that kind of representation, then we have the possibility of actually being able to represent everything with another substitute, in this case with tokens. So what we're trying to accomplish here is, why would you represent something? It's because it gathers you the possibility of creating possibly a community. It can ease you into the obtaining of a product or service, and that's why we use tokens, kind of like the representation. So on our side, what we're trying to accomplish here is, can we represent shares into something that it's more optimized, kind of like what technology can we use to represent kind of like that equity or that asset? And the conclusion was not made by Brickken. There's been obviously previous projects. The first one I believe was in 2017 that said, okay, we can represent assets in tokens. And the reason why you want to do that is because you embed it with all the characteristics of the blockchain. So the transmittability, the transmutability, the transparency, the optimization of fees and everything. So why we do that is because we want to look for that optimization phase. As if you use tokens and digitization, then one click becomes possible for you to deploy absolutely thousands of processes. So that's why we're trying to pursue the optimization phase. So everything becomes less less bureaucratic, more cheap because less intermediaries, less fees, and that's basically what we're striving to.
When you say optimization, are you referring to the tokenization? What exactly are you referring to there when you say optimization?
Yeah, so basically, for example, if I get 1,000 investors into my company, I have to go and check that the investor A deploy, I don't know, 100 euros into my bank account. And then this guy gave me 200 on fiat. And then that guy sent me whatever. Kind of like that becomes a hurdle when you're dealing with a lot of people. And also the payment backs. Hey, I have to distribute interest. I have to distribute earnings. Or even how those things transfer in the back. Investor A wants to sell to investor B. So all of the things that we do as a company, it's very bureaucratic. So when I was doing M&A and there was kind of like an acquisition, it was an absolute insane. You will go like hours into a data room trying to understand and pursue that everything that the company said was true, because the ledger itself was non-public. So all the transmissions were never public, all the transfers, all the acquisitions. There was a lot of things that you had to go literally to a bank account that was like printed by the company. You had to pursue that everything was like on point. So if you push that to the public layer where you have all of these things already well conditioned and just like one click can download you all the information, you just become optimized. So kind of like that's where we're trying to kind of like, when I say optimization, it's all about things that we pursue when we go into digitization phase. If I send an email, it's one click. You don't have to go and do all these hurdles of going to the post office, deposit the card, send it and everything. Now with like even AI, like grab me the email, pursue this and all that. That's what we're striving to, even for like the capital companies, equity and whatnot.
Okay, yeah, that's a really great, I think the audience will appreciate the sort of parallel drawn between how things used to be done and probably in most circumstances are still done. So what would things look like? Say you were doing a mergers and acquisition process, 10 years from now when equity tokenization has become widespread and adopted. What is it as simple as a one-click sort of acquisition of a company? What does it look like in the best case scenario?
I mean, it also has to do with balances, no? For example, like the protest term is a company receives 2 shares for one based on all of these actions and based how the auditor balance it after studying their financial reports and the lawyers managing the contracts and everything. So that it's doable to be on a digitization phase. Nobody has pursued it because it still seems like, oh, it's too complex. You need human labor. But do we? I mean, nowadays there's a lot of things that we can already use in technology for us to become better. So like Brickken might be doing now as a tokenization, but personally what I'm trying to pursue, it's kind of like that field, kind of like, can companies be acquired simply by one click? That's kind of like the question that I'm pursuing. And what I'm building in Brickken, it has to do with all of that. And the reason is that even some venture capitals we're going to be tokenizing just because they also see like how simple and efficient it can become, that if their shares are on the blockchain in a token, then the movements in the back can also be simple. So if there's an acquisition, can you do like a drag along where you like push all the tokens into the buyer's wallet and the wallet deploys all the earnings to the investors? Is that doable in one click? The answer, surprisingly, is absolutely yes. So that's kind of like the vision here in Brickken.
So what needs to be done for that mission to become a reality? What are the major like roadblocks that are standing in the way of that sort of seamless future that you just described?
I mean, it also has to do with also adoption, right? Because the mechanism, well, it's simple. Okay, that's not simple because you have to technology develop it and embed the know-how and have the legal kind of like clauses, how they can automatically execute. The pain point is kind of like companies not pursuing this because there's one major ignorance factor, which is this legal? Is this doable? And then you have to, they go ask all these lawyers and they say like, oh, I don't know, it's blockchain. Oh, I don't know, regulation. And it's like, mate, we've been using kind of like these kind of like gray areas and all of the programs that we use and services. For example, Uber was a super great area back in New York when it was funded because they didn't have a taxi license, but it was doable. So here we kind of like investing ourselves against the same thing, kind of like all these companies knowing that, oh, that sounds very simple because I can manage all my investors and it's easy to move and I understand how the transfer are made and I have the real-time value and real-time analytics because blockchain is a real-time open ledger. So they see the benefits, but the constraint is always kind of like, is this legal? So that's where we come in Brickken as big educators and say like, yes, it's not only legal, it's doable, it can be achievable. So that's kind of like right now, kind of like the big constraint. Us pushing, kind of like, this is not a cryptocurrency. This is kind of like just a technology being used, which is blockchain. And then you're creating a new asset class, which is equity, but you're not creating kind of like Ethereum, a utility token. You have to name things by they are. But marketing right now or the media pushes everything under the same back.
And you'd hope that that building a platform that makes it easier to, you know, check the financials of a company, have everything be as transparent as it is, would earn you some favor from the regulators. So do you think that will you have companies sort of deploying these tokens, these equity tokens onto public blockchains? Will these all be public living on Ethereum or other public blockchains? Or will they be a little more, you know, private chains, enterprise chains perhaps, that then interact with public chains? What do you think that looks like?
Yes, that's a great question, actually. Very technical. So in the end, it's kind of like also it has to relate with the fearsome level, right? Because when you have a private blockchain, you're used to having your own private database, right? So you feel secure, kind of like, oh, I don't want anybody to know and everything. But publicly traded companies doing an IPO, you already know how many shares they have, what is the volume and all the things. So we're already used to being publicly, but not at that level, kind of like the starting level. So bringing this technology or openness and transparency, it's kind of like a shock, right? So do you really need a private blockchain to pursue tokenization? The answer is no. And then they will have the compliance level saying, oh, but you have security, you need to KYC because anti-money laundering directives. Yeah, but you can embed into the token, into an ERC20 template and deploy a token that already has all these kind of like clauses embedded, not clauses, but like the coding, kind of like the functions. Hey, maybe secondary trading is not doable unless that wallet on the other end is whitelisted. So there's a lot of things you can already code. So to answer you, it's not a matter of what blockchain you need. It ends up becoming as what the other side of the company feels comfortable with.
Got it. Yeah, that makes sense. And I think, so you mentioned, you know, coding in certain properties into the tokens. That's essentially defining new token standards. Is that something that Brickken is working on, or is that something that you think will need to be done at an organization level?
Right now, there's already some standards trying to pursue kind of like becoming the one standard for tokenization. On our end, what we did is actually we got audited by CertiK on our platform, and it's about kind of like using the ERC20, which is kind of like the most common standard read by absolutely every platform. You really don't have to do that much because in the end, adoption goes by the easiness of how easy it is for people to use. And basically, my situation is you really don't need a new standard. You can really create a very optimizable one, but then you have to onboard all companies around the world, and maybe there's a new standard. So on our side, what we do is we just gave, I'm going to make like a logic here, like gave vitamins to the ERC20 standard. We created our own template with our own established clauses and functions, and it works. So again, it's kind of like, it's not because we want to create a new standard. The market itself is continuously evolving from a regulatory phase, and you have different countries with different jurisdictions and different legislation. So in the end, we want it to be as broad as possible, and then if needed, we can always specialize.
That's a good point. Yeah, you do have a lot of jurisdictions, a lot of different regulatory regimes, and we'll get a little bit more into the current challenges that maybe the regulatory climate is posing. But I just wanted to ask: so, do you think that eventually? I mean, I guess I think eventually there will be non-physical organizations that exist only on the blockchain, paying out dividends, doing all that sort of thing that you've mentioned, but without being incorporated in any location, being incorporated on Ethereum. You know. How do you, I mean, I guess DAOs are sort of getting close to that or heading down that path today. But yeah, what do you think it looks like with sort of established companies versus crypto native companies?
Yeah, actually, I went down the rabbit hole 2021 on DAOs. I became a very active and in a bunch of members because they were trying to accomplish what I thought could look like the future, but on their own perspective, right? Kind of like we are borderless, we don't care about identities, and there was a lot of concepts as to various governance methods, and I was impressed. I was like, these guys are onto something so big that how they're marketing themselves maybe not understandable from the other perspective. But if you bring all of that know-how into a corporate structure that companies understand, then maybe you can achieve what they were trying to do, which is decentralization. Decentralization does not necessarily mean lack of identity or promoting anonymous transactions. I mean, that's a part of it, right? But decentralization also means the possibility of you to be able to engage in new kind of asset classes or to become part of a new member of a community or of an investment club or whatever. Kind of like it's the way that you open yourself and then allow you to be without restriction, entering and moving in and out. Well, that's my perspective, of course. So jumping back to your question is, do companies still need to be established? Yes, I do believe that they still need to be regulated by a jurisdiction, but what you create is the digital twin. So you have your own paper document, which still much likely is needed across various jurisdictions. And then you create that digital twin a new reality. So you make sure that both are symmetric. Kind of like what happens with real estate tokenization. One shouldn't exist without the other. And that's kind of like one of the biggest pain points that also see with this technology, which is kind of like the trust, because you have a real world asset and then you have a digital asset, and you have to make sure that both coexist and are coherent with each other. So going back again to your question is, what do I see the future? It all has to do with if company registries understand that you can register a company on chain and they acknowledge that. There's already some jurisdiction testing it out. Luxembourg and here in Europe already has a public registry of DLT where you can incorporate a company on chain, and instead of shares, what you issue are tokens. And other countries, especially in the MENA region, are trying to understand that. They're deploying testing and whatnot. So I think we're going to get there. It goes back to the same simplicity as always. Instead of like 10 people reviewing registries and understanding if the contracts happen, if the transaction happened, if the money got through or everything. I mean, literally, it can all become a review of one click.
Yeah, you'd think that, I mean, as you mentioned, a few governments are getting on board already, but the value proposition seems pretty attractive, where you make everything transparent, you make everything automatically compliant, sort of compliance is baked into the technology itself. I think it becomes pretty attractive for why a corporation would want to simplify its operations doing that, and why a regulator would look favorably on it. So you mentioned real world assets, like tokenizing real estate comes with its own set of challenges. You're not exactly tokenizing a real world asset here necessarily, are you? You're sort of bridging over an existing idea onto the blockchain and enhancing it. Would you say that's correct with the equity idea?
Yes, of course. So in the end, this is where also I believe there's kind of like a divergence as to how it is and then what is solved, especially with real estate. For example, like real estate tokenization is like, do you digitize the real estate? No, you don't, because you don't create a brick or you don't build it into like a whole metaverse situation. In reality, how real estate tokenization happens is there's two ways that you can do it, and one is either you create a company that buys the property and gets embedded, and then you bring the investors through the equity deal. So in the end, you end up doing equity tokenization, or it's a property manager who wants to build a building or buy or flip or whatever the case is. And then what you do is you issue a debt contract. So again, it's not that you tokenize the real world asset itself. You always go back to what is the conditions that the company can do to be able to acquire the property or exploit the property. And the two funding mechanisms that as of now more majority exist is equity or debt. So that's what we saw in Brickken, kind of like we don't have to push it vertical because in reality, that's a marketing level. Real estate tokenization, you don't tokenize the real estate, you tokenize the company and the contract for which you buy or exploit the real estate. And in the end, we end up to the conclusion that all tokenization happens, at least for real world assets or all this vertical, through equity or debt.
Which makes sort of your approach to tokenizing equity one makes a lot of sense. So where's Brickken at currently? What are your what are some of the major milestones you've accomplished? The ones that are on the horizon close? Like, yeah, where is this all at? To give the audience an idea.
Yeah, so we are at the third year anniversary. It was actually on July. Our first year was we did an MVP for real estate, and then that's where we saw that, kind of like if you want to tokenize real estate, you always go to the company level. So we decided to do one of the startups we'll call like a suicide method, which is a hard pivot, because our whole technology that we were using for that specific MVP, we stopped using it. But we did learn a lot, right? So we had all of that know-how. We got funded and we were like, maybe let's start from scratch, kind of like the vision is different. We have funds and we have team. Why don't we pursue it? So we started developing for a year and a half our DApp, our centralized application. And when we launched it on March, we had a very good receptive from clients. We're onboarding clients on a monthly base. And now we're hitting institutionals. We have a venture capital coming up on September that is getting tokenized. On Q4, we have probably, I will hopefully say like 4, just because it's starting to make sense, not because we're pushing the narrative. We already have a great narrative and know-how that it allows us to engage with these kind of players. But when you hit the news and the tokenization as a search on Google or any media, like the biggest institutions are testing it. So it's kind of like, it's not us already telling you what we already knew 3 years ago. It's also that, hey, this fund just deployed 150 million on Avalanche. Or, hey, look at this, kind of like bank in Switzerland tokenizing their equity as a funding mechanism. So kind of like, that great news is bringing us the possibility for us to amplify our message, which has always been the same. Is tokenization is doable at the equity level, and we're just starting to see the beginnings of what the new capital markets itself as a scene is going to look like when blockchain technology is the ruling methodology as to how that works.
What do you hear from some of these institutions that either approach you or you approach? What's their take on the technology? Are they glad that someone has finally built it? Is it a newish idea to them? What do they think of crypto? Well, I guess blockchain technology, and then the applications like this.
Yeah, so this is a funny question because they come with just one thought: tokenization, but they've never seen the practical level of it, which happens to absolutely all our clients. It's like they know what they want, but they don't know how it gets to that point, right? So for us, it's kind of like very captivating that what we built was built always, like since that beginning, we were pursuing that scene where, me as an M&A lawyer, what do I expect in a data room? So that was a question when I was creating Brickken alongside our team, kind of like we should push this, but it's not because it's kind of like what not what the market wants right now, but what the market will want, in the sense that when they come to us and they say, hey, I want to tokenize, they don't know what to expect. So that's very easy for us to deploy, hey, I think you want this, and the reconciliation process to be cheaper, and then to have the ability to manage your whole cap table, and everything that you do is transparent, which can push all of this. So instead of us suddenly answering question, we right at the bat deploying answers that they didn't know it was possible, and then they were like, oh my God, tokenization can do all of this. And it's like, dude, this is my MVP. Become a client, we're getting funded, we just wait what we can build in 1-2 years, because I'm already giving you answers you didn't know you will have. So imagine what we can do in a couple of years.
That's an exciting take. I think it is one of the more dynamic and growing sectors of Web3 is tokenization. So you mentioned a VC firm, a bank. Are there any specific industries you think would benefit from this? Financial, obviously. Any other ones?
Right now the market is really pushing real estate just because it's one of the most illiquid assets for the most, like with the biggest APY. Real estate has always been growing. So I do believe that the first threshold is going to be with that easy concept, no? Kind of like, okay, real estate, yeah, you can compartmentalize the real estate and you can get invested for like as low as €100, and then you have all of this, because that's easy and simple to understand. Because the market is still trying to comprehend how tokenization works and what are the things that can be done behind it and whatnot. But when we go more deep, in the end, I'm still gonna go with my pitch right here. It's kind of like equity. So when you tell me what vertical is gonna be the most out there, in the end, it's bringing kind of like the Shopify concept. Why did Shopify thrive as I think, and it made e-commerce grow like heck? Because it didn't focus on a vertical. It provided tools, a set of tools and functionalities for the little restaurant, no, the little like perfume in the corner, or the chair maker, or the jeans supplier, everything, to be able to create an e-commerce. So what they did was tokenization shouldn't be about a vertical, in this case, the e-commerce. It should be about giving them the technology layer for the company trying to create the e-commerce to be able to deploy it in as simple as possible. And that's why internet thrived and then e-commerce thrived and all of that, because it was not focused on a vertical. It was about giving them a solution for them to have an online presence, an online channel of acquisition and sell.
Got it. Awesome. If anyone in the audience has any questions they'd like to ask Edwin before we wrap this up, related to Brickken, related to tokenization of equity, feel free to request as a speaker or drop your question in the comments of this space, and we can get to that as well. So are there any, so this tokenized equity, when it comes to integration with the sort of legacy financial system, how far are we away from, you mentioned it in Luxembourg, this is already happening, but like in terms of integration with existing financial systems, is that something you just sort of have to wait and see? Do you think it's something that's being thought about in major countries, or are these smaller countries acting as like trial grounds for proving the technology, do you think?
Yeah, I think a lot of the trial and testing already occur, especially with offshores. Kind of like these little countries that used to already work on financial instruments, they saw this kind of like the next big step, because the only way to maintain their country has always been with banking or like financial instruments or the offshore and whatever. So we already had all those tests. And Luxembourg, I'm going to say, is one of those tests. Then suddenly big countries, for example, Europe, deploy a regulation for the creation of security markets that can rely on blockchain. So that's kind of like the huge innovation. And we're seeing kind of like these new bills coming across different countries where the world kind of like, hey, securities can use the technology of DLT, which is massive. So it's not that we haven't gotten there. Like if we had this conversation a couple of years ago, I would be like, the first step that we need is for regulation to acknowledge that this is a new method. I'm not saying it's the only method. As long as it's placed as an alternative method, then we have already gained a lot. And this year, we're already seeing that. So now that we have that possibility, and cross-country kind of like administrations, lawyers, other countries are acknowledging the fact that securities, as we know them, can run on blockchain, then the next couple of years, it's all about kind of like, okay, you put that into a law. Now, how can I execute it? Like, what do I need for that to be part of my system? And that's what we're going to start seeing, kind of like the upgrade and overhaul of what we have come to understand. And now adding that, okay, we have system A, that is kind of like the offline. We have system B, which is kind of like the digitized phase of the paper format. And now we have the C, which is kind of like this craziness that everything is in real time, transparent and whatnot, and we have to come to understand it. So I think right now we're in that in-between phase between digitization and full exposure.
So when it comes to something like startup equity, a lot of people will be familiar with the concept of RSUs, restricted stock units. These are like, granted to employees as part of a compensation package. Is that a field where the equity tokenization can improve things, or is it not really applicable to this? What are your thoughts on this specific application?
I think it makes a lot of sense. So for example, when you're an employee, you come to a company and then you get promised, and then you sign a contract, and then you have a vesting and all of that. But the employee never gets the touch or the feel, right? So it's like, yeah, I have equity. Many of them don't even understand the value of equity because, us humans, we're used to property, right? Whatever I hold or whatever I have access to, it's mine. I feel like it's mine. So when you bring this customer, it's like, hey, I'm going to give you phantom shares and I have my token A, and then you're going to have the token B, and the token B is always going to be related to token A, and now you have it in your wallet. So now you understand that you are a true owner or semi-owner of what you're trying to build here with us. It's kind of like that works for them because it's like, oh, look at that, I have it in my wallet. No, perfect. So that means that the phantom share, it really works like this. Because in the end, if it's a contract, a lot of people just say like, oh yeah, I do have phantom share, or I have access to the shareholding, but it's kind of like all paper-wise. So yeah, maybe we digitize it and then you have a DocuSign in the middle. But still, how many people review the contracts that they sign? God damn, I'm a lawyer. I don't even review my contracts as to the year ago that I signed. But the only thing that I know that I review are my wallets because this is kind of like my property. I have this or my application. So it's kind of like because us as humans, we're used to having property, and that kind of denotes what I own and what I am and what I have to become. So if you bring this technology and allow them to taste or handle what you're giving them, then it actually empowers them.
For sure. That's a great explanation of its applicability. And that was just something that came to my mind. Yeah, and when you said tokenizing equity would be a good theme for this discussion, that was the first thought I had. So it's great to hear you address it. And I mean, yeah, overall, it sounds like a really exciting sort of area that's already seeing adoption. I think you're building something that is, actually a functioning product and actually going to help a lot of people. And I think that value is being recognized. So it's great to hear that you're doing well and that you were audited with CertiK and take security seriously, obviously, as security of stuff like this is so important. So we're coming up on time right now, but are there any final words you'd like to leave the audience with?
No, thank you very much for having me in this great space. Obviously, if anybody wants to learn more, they can follow me or Brickken itself, and we're open for discussions. And whatever question they may have, if they don't see it suitable, they have a lot of doubts, trust us, we already have a solution for you because we've been encountering doubts for the last 3 years, so we understand what are the pain points, but also what is the point of perspective that can help you understand that this is not something that we're selling you as a snake oil or whatever, but actually a solution that institutionals are trying to understand and in fact jumping in. So yeah, as a fact, I would love to say that even though the crypto markets are as such and we have some news, security markets have been the ones thriving over the last hundreds of years and they need an update, and this is the update. So hopefully you guys get the feel of tokenization and hopefully you all jump in because this is what's going to happen.
Inspiring words. Thank you very much, Edwin, and thank you everyone for tuning in. Check out Brickken. The link is tagged in the description of this space, and look forward to you all joining us next time for the next Ask the Expert. Thanks, everybody.
Thank you very much, everybody.